Render and LMWR have been our personal favorite AI altcoins here on the channel, and we have been covering them a lot throughout this bull run. Now, both of these tokens have already had really impressive performances, both going up about 2,000% from their respective bear market lows. However, I do believe that these AI coins could see another 2,000% rally to the upside, as both of these projects are burning tokens and reducing the supply at a time where the demand for them only continues to grow. So in today's episode of the Everything Crypto Show, I'm going to break down exactly what these teams have been doing with their token burns and why this could lead to some major gains for both of these AI altcoins. Now, before we hop into the content, just a friendly reminder that I am not a financial advisor. I am simply here for your crypto news and entertainment purposes. And if you do enjoy the content, please consider hitting that sub and like button and turn that notification bell on so you can be notified when all of our latest videos go live on the channel. So we're going to get right into today's altcoins of discussion, and today we are going to be focusing on both the Render token as well as the LMWR token. Now, if you've been with the channel for a while, you know that these are my two biggest AI positions for the upcoming bull run. Render effectively being my large cap AI play as the current largest AI altcoin by market cap, and then LMWR being our small cap AI play with a sub 100 mil market cap at the moment, which I do believe will continue to grow, and I could see this hitting well over $1 billion in the bull run. So we actually tweeted here, I believe this was, in late March, my AI altcoins for this cycle are Render and LMWR. And I have been focusing on this sector a lot as we have seen Nvidia start to cool off, but the demand for AI is only continuing to grow. And I do think that just like a lot of narratives, whether it was the Layer 1 trade, the meme trade as well, they tend to see this massive burst of growth, then they cool off and consolidate for a bit and then see another huge leg up to the upside. And this most recent pullback that we saw here, I did take as an opportunity to add to my positions. So I tweeted here on April 13th, calling max pain here for this pullback. And if we actually go ahead and take a look at both of these coins on a shorter time frame, you can see that April 13th did basically mark the double bottom here for this pullback on the Render token. If I actually go out to a year and keep us on a daily, you can see right here that this is actually April 13th for Render. And then if we take a look for LMWR, April 13th, we did see this big wick down. And since then, the token is up over 50% from that April 13th price at about 81 cents. So both of these altcoins have seen nice bounces since that April 13th, quote unquote bottom. And I do think that these tokens are set to continue outperforming moving forward. Now, one really bullish catalyst for these altcoins, despite the AI narrative, which is definitely a big one, is the fact that both of these projects are burning tokens in one way or another. The Render network is doing it through something called a burn mint equilibrium, which we will discuss, and LMWR has the team actually doing periodic burns. So we're going to start off with LMWR here. They tweeted, our sixth burn has been completed, successfully burning 27.5 million LMWR tokens. And their first burn program is now fully complete. And the fact that they said first kind of implies to me that they may be looking to do more burns in the future, which, I will never complain about. Burning tokens and reducing the supply is only bringing more value to the current holders of the token, and actually putting more value behind each token itself, as there is just less of it to go around. And you can actually verify here. If we take a look at Etherscan, they did transfer that 27.5 million LMWR, which is worth about 37.4 mil USD to a null address. And then if we actually go ahead and take a look at the LMWR token on Etherscan, we can confirm that despite starting off with a 1 billion supply, that supply has already come down here to 773 million, and the token currently has less than 10,000 holders on chain. And to me, I do think that this is a mispricing in the market, which is why this is my small cap AI altcoin, as I have personally used the LMWR platform and I am impressed by what I have seen from it. I think most people are familiar with LMWR in its early 2000s, where you could use it to burn music onto CDs. This is not the same LMWR. They have actually basically reinvented themselves as an AI platform. You can do, AI text to image. You can see here the AI studio. So it's text to image, text to audio, and then text to video is coming soon. So it's very similar to something like OpenAI's DALL-E 2 or Microsoft's image generator, which they have right here, the text to audio as well. And I do think this text to video launching, especially after OpenAI showcased their Sora video generator, that this could act as a further catalyst for this token. Now, if we actually take a look at the metrics of the platform here, it already has 1.2 million platform users. This is not a small platform whatsoever. And the fact that there are 1.2 million users of the platform and under 10,000 holders on chain, I do think this is a bullish look for the token, and that is why I believe it to be undervalued at its current level. So LMWR is my small cap AI coin for the bull run. Now, additionally here, if we take a look at the charts, we can see that it pulled back all the way to that 80-cent level on the most recent drawdown there. It snapped right back up, validated the $1 area of support here on the daily candles, and since then has been making its way back to the upside. And I have spoken about this pattern with LMWR before, where it basically run-ups and then it pulls off and consolidates back to prior highs. Once again here, we see a run-off and then it pulls back to the prior highs. We see it here once again, where it runs up and then pulls back almost to the prior highs. It just kind of makes this pattern over and over again. And the most recent example we got of it was actually on this pullback right down to $1, that flash crash down to 81 cents, which was, give or take, the local high it put in February of this year. And I mean, like, very brief high, because by March it went on to make a new one. But it does have this sort of pattern of running up, pulling back and consolidating, and then making its next leg up. And to me right now, it looks like it is in the middle of making that next run to the upside. I would not be shocked at all to see it make a run and fill that ICO gap at about $2.20. So that's it for LMWR. Now, I do want to speak about the Render token as well. And the Render token, they implemented a burn mint equilibrium back in 2022. This was even before they actually made that push into the AI sector. And the AI sector and the demand they are going to get from being in this area of the market is going to help further increase the burns taking place. So we're going to actually break down exactly what this means and why it can potentially push Render to triple digits. Also, thank you to the Wolf of DeFi for this tweet. So, Render Network is a project connecting idle GPU resources to entities needing computing power. Projects like this are at the beginning of their adoption cycle, as the AI era has just begun. With the world's shortage of computing power, these projects aren't just about the hype. They are actually solving real world problems. And in this case, it is basically allowing people to monetize unused GPU resources. So if you have this GPU power, which is in such demand right now, you can essentially lend it out over the Render network and then get paid in Render tokens for this. And the demand for AI right now is exponential. The supply is the bottleneck. That is something Render is looking to solve. So the basic concept is straightforward. A supplier offers computing power to the network where the end user can buy and use it. This could be to run AI models, render videos or images, or do other things that require computing power. Now let's take a look at the burn and mint equilibrium model and how it accrues value for Render. When an end user buys computing power, they can pay in Render or in USD. If they choose to pay in USD, it is then converted to Render in the backend from the team. All of the Render collected is then being burned. However, suppliers need to be rewarded as well. So this is done by minting and distributing Render tokens to suppliers. The amount that will be minted each month is fixed as the usage of the network grows, which is, the expectation here from the Wolf of DeFi and myself as well. I am only expecting the demand to increase for the Render network. This is going to mean that more render will be burned while the same amount of tokens is distributed. So when people are completing tasks and actually paying in render or paying in USD and then having it converted on the back end, the equivalent amount of render is being burned, and then that render that is burned is basically minted into these credits to go out to the suppliers, who are able to then pay for these tasks. So this causes deflation. The equilibrium is reached as the price reaches a point where fewer tokens must be burned to equal the amount on the network spent by end users. So assuming render trades exactly at $10, and for each epoch, 10,000 tokens are minted and distributed, so $100,000 worth, while the end users are paying $150,000 for the computing power, this means that $50,000 worth of the tokens will be burned and will not enter the market, making render deflationary. And this effectively means that the more the usage on the network grows, the more that the value of render should grow because more and more tokens are being burned. I think a really good example, and the biggest one that most people like to point to when it comes to burns, is BNB. And I'm not comparing it to the actual burns that BNB has made because the burn schedule is completely different. But BNB is one of those tokens that really benefited from just the narrative of the burn, from people understanding that, burning the token, the existing token supply, is only a good thing for the price and for the actual value of each token that is left on the market. There are simply less tokens to go around. And BNB here, we can see it's not at all-time highs, but it is close to getting back up there. And this is the most common example of what a good burn and a consistent burn mechanism can do for the price action of these tokens. Even if you remove the fundamentals and the actual math behind it, just knowing that tokens are being consistently burned, the narrative behind that, which is a part of crypto, narrative is a part of it, right? It's a part of the expectations. Just the narrative of that burn does tend to be pretty bullish for the price action. Now, we can actually see a live update on how many render tokens have been burned cumulatively, sitting at over 51,000. So not even 100,000 render tokens have been burned yet. And I would expect this to ramp up as the network usage does continue to ramp up as well. Now, in terms of the price action for the render token, we have once again reclaimed the 2021 all-time high. And in my opinion, that is a very big level, okay? You can see here that we did break below it. Now we are back above it once again, and both times we've actually snapped back below it here. This token has pretty much come right back up to reclaim it. So we saw it happen here on the 13th. We saw it happen here on the 13th and made a run back up to it. Actually got up to about $9.50, got rejected, made its way back down to the bull market support band at about $7, bounced right off of it, and is now back up once again. And I also think that if Bitcoin is going to make a run back up to its all-time highs at 73,000, that render is most likely going to follow suit and make a run back up to its all-time highs at just over $13.50. And from current levels, that would be a run of about 47% to get back up there. So, as I tweeted here, I do suspect that this was in fact max pain for this pullback. I do still believe we are in about the middle phase of the bull market. The halving has just taken place, so I do think that we still have quite a bit of this bull run left to go, and therefore I do treat these pullbacks as pullbacks. And we did see a really steep one here. We saw some alts down 40 to 50% on average, and we just saw a massive capitulation down double digits here in the matter of just a couple of days. So for the most part, I do think that this bounce back is one that will continue to move forward unless there is a fundamental shift in the narrative or in the Bitcoin price action, which does tend to dictate the overall market. So as of right now, I do think that if Bitcoin is going to make that run back up to prior highs, that render most likely follows suit. But I want to hear what you guys think about both the render token as well as the LMWR token, or let me know about some other AI coins that you have personally been keeping your eye on in the comments down below. And on that note, I hope you did enjoy the content in today's video. I hope you are all staying happy, safe, and healthy, and I hope to catch you in the next one. Peace out for now.